Hello, hello. This is David Totten, and I am with eXp Realty here in Danville, Virginia, also licensed in North Carolina. I have two very special guests with me today. Uh, and I just like to welcome you to our live stream. I have with me Mr. Frank Webster from Virginia Housing and Mrs. Tyleek Mason from Alcova Mortgage. And we're going to talk about leveling up home buying in 2024. And Mr. Webster has been gracious enough to join Tyleek and I today to talk about some new programs through Virginia Housing, some of which we've never seen before. So I will let Mr. Frank introduce himself, then I'll let Tyleek introduce herself, and then we're going to get into our discussion for today. If this is your first time to the channel, please like and subscribe so you're the first to learn about everything there is to know about living, working, playing, eating, and living in Danville and the surrounding area. So, Mr. Frank, it is all yours, sir.
Oh, hey, David. Thank you so much for having Tyleek and myself on the call. I have been I've devoted my life to housing and creating affordable home ownership opportunities. I've been I was a loan officer for 35 years in the Hampton Roads market. I worked, with a lot of first-time home buyers. Worked with the realtors, so I've been out on the front lines in the trenches, and I know it backwards and forwards. And I've been with Virginia Housing as a business development officer for the last 7 years. So a total of 42 years of helping people get into homes, start experiencing the benefits of home ownership, and so I'm just really excited to be able to bring this news and share this information with the residents of Danville and the surrounding area.
Well, yeah, Frank, thanks for joining us today. Tyleek.
Hey everyone, my name is Tyleek Mason. I'm a mortgage lender with Alcova Mortgage, and I mainly specialize in Virginia and North Carolina. But I'll say the bulk of the loans in my funding is throughout Danville, Virginia, South Boston, Martinsville, Virginia, Richmond, Hopewell. So I have funded, millions of dollars into the community and helped a lot of first time home buyers acquire their first homes. And I've utilized Virginia Housing's program to help people, especially people who are not able to, save up enough for their own down payment and save up for enough for their own closing costs. So this is an amazing program that I have utilized for a lot of buyers, and it's been the make or break between people being able to acquire a home or not being able to acquire a home. So I'm so excited to have Frank here. I love working with Frank, and he is so knowledgeable about Virginia housing, and you guys are going to learn a lot today by, working with Frank and listening to him.
All righty. So, our topic today is about helping people level up their home buying in 2024 because we know, when COVID hit a few years ago, everybody was in the market, flooding to the market to buy a home. People were leaving the big cities and going out into more rural areas because they didn't have to show up at an office every day. Interest rates were at an all-time low, and inventory was tight. So, we fast forward to 2024, interest rates have more than doubled from what they were back in 2020, 2021. So, Frank, our first question today is how does Virginia housing particularly help buyers purchase homes in the state of Virginia?
All right. Well, we partner with local professionals. We partner with local lenders, realtors, nonprofit organizations, and governments to help channel the resources that we have to reach the home buyer who needs them. So the types of assistance that we channel through those professionals are we have assistance programs to help a borrower with the upfront cost of getting into a home, which is the biggest impediment for a first-time home buyer. A lot of first-time home buyers have good jobs, good income, good credit. They just don't have enough money to cover the required down payment and to cover some of the associated closing costs. So that's where we come in really handy there, is that we help bridge that shortfall, that gap. And we have different types of assistance programs. We have gaps and loans. We have grants and loans and such that can help the borrower cover the funds that they need for closing. And then the other thing that we do is that we have ways where we can lower the borrower's monthly payment. We have lower interest rates. We have lower costing private mortgage insurance. And the cool thing is when you meld it together, when you provide a home buyer with the assistance that they need to get into the house to help them get in for less money out of their pocket, and you can figure out a way where you can give them a lower monthly payment, that's a double win. And it just creates so many great opportunities to get somebody into their home. Previously, it's always been for first time home buyers only. Starting in December of last year, we opened these programs up that we're going to be talking about today to repeat borrowers too. So you don't have to be a first time home buyer to take advantage of many of the benefits that we're going to be talking about today.
Okay, so I do know, with Virginia housing, that was strictly previously only for the first time home buyers. But now, you're saying that's open up to repeat buyers who, have purchased a home. Is that through the program? They've come through Virginia housing before, and now they can use Virginia housing again to purchase their second or even third property. Is that what you're saying?
Well, what I'm saying is previously, if somebody had owned their primary residence, no matter who it was financed with, they would not be in the last 3 years, they would not be able to take advantage of Virginia housing programs. So one of the key eligibility criteria was, have you owned the house that you live in the last 3 years? If the answer was yes, you would not be able to proceed with doing a loan with us. And if the answer was no, we haven't lived in the house that we owned, then you would be able to receive the benefit of this. Now, if somebody currently owns a home, and let's say they have a growing family and they've outgrown the current home that they're in and they want to buy a larger home, then they can come to Virginia Housing and they could get the down payment assistance, the closing cost assistance, the lower interest rates and such to help them get into the new home. And then they could either sell their current home, or we even allow them to convert their current home into a rental property, and that would just give them that much more opportunity to have the wealth building that comes from real estate. Because if you own one house, you're building a certain amount of wealth. If you own two houses and you have one as your primary residence and one as rental property, then you're just multiplying the wealth building aspect of home ownership. So that's what I'm saying is it's not merely somebody who's dealt with Virginia housing before that can come back again. It's anybody who, no matter who they finance a home through, that if they come back and they come in now, they would be able to get many of the same benefits that we've previously only offered to first time home buyers.
That is a big deal. I hope everybody that's watching had took a note of that. I think Talik had a question for you, Frank. So I will let her ask you the next one. But big deal, opening it up to the folks that who are not first time home buyers. So that's great news.
Yes, that's awesome. So, my question is, how are the new bond and non bond programs through Virginia Housing opening more doors for families in Virginia?
That is a great question, Tyleek. Thanks for asking that. So, bond loans primarily help who we have considered our traditional customer, and that is the first time home buyer. So bond loans are still focused on helping first time home buyers. They've not owned their primary residence in the last 3 years. When we're offering the bond loans to these first time home buyers, we're providing a slightly lower rate. Non bond loans have a slightly higher rate. We're also offering the bond loan borrowers a full menu of choices for down payment and closing cost assistance. There's more types of assistance. There's more variety and choices there on bond loans, but bond loans have stricter eligibility requirements. There's more rules and guidelines that we have to follow on a bond loan. Non-bond loans are going to allow us to help a segment of the market that we have not previously been able to help. So, and that is going to be repeat home buyers that have higher income, home buyers that are purchasing more expensive properties. So we still provide options to help these home buyers with their down payments and closing costs too, but the bond and the non-bond choices are helping us to aim at different segments of the market and be able to help everybody, because our goal is to help all Virginians have affordable, safe home ownership, and to have as many people as possible start getting the benefits of the wealth building benefits of home ownership.
And one thing I want to add to that is one of the thing that's the most amazing about this is the increase in the income limits that they've now allowed and the purchase price amounts, because that was something that a lot of borrowers, struggled with previously, with the grant program, was making too much money to get the grant, or total household income potentially being too much for the grant. Now, previously, the second mortgage was just for whoever was on the loan, and it allowed to have a little bit of a higher income. But then, even sometimes that was still a little bit too low, and most people still could make a little too much for that. But now that those income limits have increased, it's really opened the door for a lot more people, who still need help at those higher incomes, who still can't accumulate enough savings to put down a down payment without some help. So that's a game changer for sure, and it's opened up a lot more people to be able to utilize the program.
So since we're talking about like the income, the income levels, what are those income, I guess, caps or minimums for the bond and non-bond programs, Frank?
So there are different variables that will affect that. Okay, and the simple answer is, if you're doing it goes along with the non-bond program. With the non-bond program, our income limit is $152,000 for the Danville and surrounding area. In different areas of the state, different regions of the state, there's different limits. But if you're doing a non-bond loan in Danville, Martinsville, that whole surrounding area where you guys are, the income limit is $152,000. You only have to use the income of borrowers towards that limit, and the size of the household does not matter. So you could have, that's really a high limit based on our previous standards and based on assistance programs that you could get from other sources. If you're doing a bond loan, that's going to be for your first time home buyers, typically bond loan home buyers are going to be they're going to have lower income and buy less expensive homes, but the income limits for their range from 80,000 up to $115,000, and that's based on the income of all household members, not just the income of borrowers. So you can see, I mean, even though we are here to help people of low to middle income, having income from limits of 80 up to 115,000 on bond loans, or up to $152,000 on non-bond loans, that is really flexible, and that's going to allow a very large segment of the home buying population to take advantage of our programs.
Yeah, because those limits are a lot higher than what they were in the past. What do you know what they were before these the new 2024 programs rolled out?
Well,
By
there was no non-bond loan, and there
right,
was
right, right.
so that was not there. I would say the income limits probably went up, maybe on average, maybe $5,000
Okay,
per
okay,
per category,
got it.
depending on what type of benefit that the borrower was seeking to get from Virginia Housing.
Okay. All right.
So we've for an organization that's always been here to help low to middle income individuals and families. I feel like we've always had some pretty robust limits there for income to allow people to take advantage of our programs. But we've made it even better this year by increasing the bond loan limits for first time home buyers and establishing this new category of income limits, the non bond or the expanded income limits that we have.
Okay. Note number two for everybody: those income levels. 80 to 115 for bond loans and up to 150. Was 152 for
150
non-bond?
152, and with the non-bond, that's only from for borrowers. So if you had 2 people in the household and they made 200,000 and
Yeah.
you
Mhm.
but you segmented it and one person one person made 152 and you can take leave the other person off the loan, then you could have households that make even more income than that figure out a way to take advantage of these benefits that we're talking about today.
That is awesome. Wow. Okay, so what down payment assistance or closing cost assistance programs are available for buyers with the new 2024 programs?
We have a lot of a lot of choices there. So let's talk about bond loans first, because bond loans have the greatest amount of variety. You have the largest menu, or it's kind of like a buffet bar of benefits. So with a bond loan, we start out. We have different kinds of grants, and for grants to Virginia Housing, a grant is basically free money with no red tape. If you get a grant from us, there's no lien, there's no interest, there's no monthly payments, and the money never has to be paid back to Virginia Housing under any circumstance. So we have two different forms of grants. We have a down payment grant that can be used on FHA and conventional loans. And we will give a grant to the borrower that will reduce their required down payment to 1% of the sales price. Now, typically, FHA requires 3.5% down, and conventional requires 3% down. That's already pretty aggressive there. But when we subsidize that with our grant, we're going to lower the borrower's payment to 1% of the sales price. And we'll even allow the borrower to get a gift from a family member for that 1%. Or if there are other organizations that the borrower can seek out assistance from, you can meld assistance from other sources that aren't Virginia Housing into what we offer to really give the borrower a lot greater benefit. So that's down payment grants. We also have a closing cost assistance grant that can only be used on VA loans and USDA loans. These loans already provide the borrower with no money down financing. So we're not going to provide down payment assistance on a loan that doesn't require a down payment. But we do have, for those loans, we will give the borrower a grant equal to 2% of the sales price. So if somebody was buying a $300,000 house, using VA or USDA, they're already going to get no money down, but Virginia Housing would give them $6,000, no strings attached money to help them with their closing costs. So
Jesus.
that's all. So, and then the other option that we have, is the plus second mortgage. The plus second mortgage can be used on both bond and non-bond loans. And what this plus second loan does is for FHA and conventional loans, which usually require a down payment, we will hold a small second mortgage to cover that down payment. So when you combine the first mortgage and the second mortgage together, we're going to be financing 100% of the sales price and there's no down payment at all. And the terms of that second mortgage are incredible. It's a 30-year loan, it's fixed rate, it gets the same interest rate as the first mortgage. And a lot of times the payments on that second mortgage are going to be a mere $50 to $100 a month. But it's allowing the borrower to get into a loan or get into a house with no down payment. And if the borrower has at least a 680 credit score, we'll increase the amount of that second mortgage by 1.5%. So we'd actually be financing 101.5% of the sales price of the transaction for the borrower. And the benefit of that for the borrower is they get in for no money down, but that extra 1.5% will create additional closing cost assistance to help the buyer, which is again a big deal. And so if somebody was buying a $300,000 house and they were taking advantage of the second mortgage and they had the 680 credit score, not only would they get in for no money down, but we would provide them with $4,500 worth of closing cost assistance, which is roughly half of the closing costs involved in the transaction. That's a significant boost there. And if you could get the seller to pay the other half of the closing costs, you could conceivably get a home buyer into a house for no money down and no closing costs. And they could really actually go to closing and get a check back from the settlement agent to reimburse them for all of what we call their paid outside closing items. Like they had paid their earnest money deposit of $500, their appraisal fee of $500, their home inspection fee of $500. So if you structured it right and with a little bit of luck, the borrower could go to closing, and instead of needing to bring money to closing, they could actually get a check for $1,500 back from the settlement agent. And when you do that for a home buyer, that really just lights them up.
Yeah, I agree, and I think that they would tell the whole world that my agent and my lender in Virginia Housing helped me buy a $300,000 house, and you bring no money to the table. That. So essentially, this is opening doors for a lot of folks to come back to the market, right?
Right.
Because
It is.
a lot of people shied away because interest rates went through the roof, inventory was a little to nothing, or you had 5, 6, 7 offers on a house, and if you needed closing cost, if you didn't have money for a down payment, that kind of puts you out of buying a home altogether for a while. But what I'm hearing, even thinking as a home buyer, is that now's the time, honestly, because
Yeah.
who knows how long these programs will last, right? I don't know. I don't know if there's a time limit on them or income limits could change. We don't know what the market is going to do, but as far as being a buyer, now is the golden opportunity to find. I mean, $300,000, that's some people's dream house.
Right. And
Um,
forever home. And I'll also piggyback on this because me being a lender, I see these numbers every day and I see how it pans out for my clients. And I'll say a lot of my clients are able to come to closing with no money out of pocket, getting a check back, or literally little to nothing. I had a closing with Virginia Housing where the couple brought $31 to buy their first house, and that was on a $200,000 house. So I've seen these numbers work for people, and I have the majority of my clients who go with Virginia Housing, they're able to bring little to nothing out of pocket. Same with, utilizing USDA as well, little to nothing out of pocket. So when people ask me, how much money do I need to have to buy a house? That's a trick question because, when you're able to get people into a house with nothing, then, I can't tell you, 20,000, something like asinine that they would think they would have to bring, because you're able to see these type of numbers and really be able to help people get into their home almost for free.
Yes, I agree. I have been a testament to, along with Talik, that when we're at the closing table, people getting checks back, at settlement for hundreds and thousands of dollars. And it's all thanks to the programs that are available. And this is just opening up really the floodgates to a lot of people who counted themselves out of buying a home because I make good money. Like you said earlier, Frank, they make good money, but they may not have that stash put away for down payment and closing cost. And then if you ask a seller for closing cost, especially when there are multiple offers, that number is going to have a huge effect on that seller's decision to go with your offer or someone else's. But I guess we'll move on to the next question. Talk, you wanna
Yeah,
answer that one, Tali? Okay.
I got you. So, how are the Virginia housing interest rates so low and competitive?
Well, I would say there's two ways that we leverage this to help our rates be lower or to be more competitive. One is, where are we getting the money from to fund our loan programs? So we actually sell tax exempt bonds into the secondary market to finance or to fund the loans that we offer. And when you're getting the money from tax exempt bonds, the yield on tax exempt bonds is lower because the interest on it to the bondholders is um, tax exempt. So when we're getting our money from that source, that allows us to kind of undercut the market and have lower cost of funds, which turns into lower interest rate loans. So that's the first part of it. The other part of it is that all lenders, and this is a universal truth here, they have they have what they call loan level pricing adjustments that they make on their pricing when they quote a rate to a borrower. And if the borrower or if the property have certain high risk characteristics, they add a surcharge onto the interest rate. So if a borrower has a lower credit score and they're making a low down payment and they have a low credit score, universally and globally, lenders charge a higher interest rate. Or if the property being purchased is considered to be a higher risk, like it's a manufactured housing, there's going to be a premium added on to the interest rate. And if you combine that and have a borrower with a lower credit score and they're buying it like a double wide, that can really cause there to be a increase in their interest rate, which goes against the grain of making it more affordable for the home buyer. When you're dealing with Virginia housing, we don't charge those adjustments. So that home buyer, that if they were going to get a mortgage from some other source and they have a low credit score and they were going to get a double wide or they were going to buy a condominium and going to any other source, they would be paying a higher rate than the market. They come to us, we don't charge those extra rates. And so they're going to be able to get the best rate, the lowest rate possible in the marketplace. And that, when you combine that with the assistance that we give them for their upfront costs, their down payment, their closing costs and such, that really just creates that perfect storm for the home buyer where we can help get them into a home.
Okay. So that is my mind is blown now, Frank. just to be just to be honest with you. Because I mean, this information, if it was just readily available to everybody, which I'm glad that you did decide to join Talik and I today. But as far as like interest rates being a thing, and you all being that competitive with other rates, that again, it just sounds like to me, if folks hadn't gotten it yet, that now's the time to buy.
And I will also interject really quick and say this. What Frank was saying about manufactured homes is 100% accurate. And in this area, we have an influx of manufactured housing in the, Southern Virginia. A lot of people want to buy really, really, and they're in great condition, manufactured homes. But when I tell you, I try to push any manufactured homes to Virginia housing because I know the rate is going to be so much better for the client. The payment is going to be so much better for the client because they are, the pricing anywhere else would be very excessive. And on top of that, typically the insurance when you have a manufactured house is also high. So if we can at least get the rate down and get, the pricing adjustments off, that helps when you go to get like homeowners insurance for a manufactured home. And that kind of balances things out for the client if they are looking to purchase a manufactured home.
Um, so I agree. We do have quite a bit of those. That and those are becoming more popular now with folks. So thank you, Frank. So our next question is, um, as far as maximum purchase prices of homes, how have those increased throughout the state?
So each region or each metropolitan statistical area have their own limits.
Okay.
So Danville and Martinsville and that whole surrounding area, you're considered to be all other areas of Virginia. Okay. So all the limits have gone up tremendously as of December when we rolled these changes out. So the limit in your area where you are went up $120,000 in one fell swoop. So our sales price limit for a bond loan was $330,000. That meant the sales price of the property to be eligible for Virginia housing could not be more than 330. We raised that to $450,000. But wait, there's more.
450.
So we raised the bond loans by $120,000 from $330,000 to 450,000. But wait, there's more because on non-bond loans, we totally removed the sales price limit, and we don't have a sales price limit on non-bond loans. So you could be a repeat home buyer and have no sales price limit, have really high income limits, be able to get our plus second loan, which would allow them to get in for no money down, also perhaps be able to finance about half of the closing costs that would be involved in the transaction into the balance of that second mortgage, still have the flexibility to get seller concessions to help with even more closing costs, and all of that is available. And I mean, we really feel like this is going to be a great rebound year for housing. Rates have been coming down some, and we're rolling out these enhancements and these upgrades to our programs where more people are going to be able to take advantage of these things than ever before. So we think that this is going to be the year that a lot of people can get back into housing and secure affordable, safe homes for themselves.
Yes, sir. I agree. So I would like to put that note in the comments for viewers. So bond loan um, limits is at 350.
Bond
400,
loans are 450.
450. Gee.
450.
Okay, and non-bond,
No
no
limit.
limit.
No limit.
No limit on purchase price.
I mean,
Wow.
you could have a 500, a $600,000 sales price, a $700,000 sales price, and you would be able on a non-bond loan to be able to finance that, and perhaps if you can, if you can qualify for it, you can get no money down, finance half of the closing costs into that second mortgage. So it's an incredible opportunity right now. I've been doing Virginia housing loans for 42 years.
Mm-hmm.
35 as a loan officer and 7 working for them. And I never thought I would see the day that we would make these kind of aggressive changes, uh, to open up things for who can participate and who can get the benefit of these programs.
Yes, sir. Um. Well, Talik, you got the next
Yeah.
question for Mr. Frank?
Yes, I do. So, how do buyers qualify for these programs?
Oh, that's a good one.
So there's two categories of requirements. One would be you have to be able to qualify for a loan in general. And the criteria for qualifying for a loan with us would be pretty much the industry standards for for being able to qualify for any mortgage. But the lender is going to look at things like the borrower's income. Do they have sufficient income to carry the obligation? They're going to look at the borrower's credit to see if they have a history of being reliably paying their obligations on time. They're going to look at the assets that a borrower has. See, do they have enough money for closing, or do they have reserves left over, or do they have they demonstrated the ability to put some money aside for the future? And then they would also look at the collateral, they would look at the real estate, and then they would assess that to determine if the borrower was a good risk. Could we reliably expect them to make the payments, to make the repayment on the loan if they got it? So we use industry standards when it comes to qualifying for loans. You have to have at least a 620 credit score. The income, it's harder to say how much your income has to be because it's relative to how much of a house you want to buy and what your other debts are. But we will allow a borrower to spend up to 50% of their gross monthly income towards all of their debt servicing, which would be the total of their new proposed mortgage payment plus their other recurring obligations that they have. And of course, even if we structured the deal where the borrower didn't need any money for down payment or closing costs, it still looks good for them to have demonstrated that they have some money in the bank. So those are the things we look at there. The other thing that we look at is the eligibility criteria. We've alluded to that a couple times today in this conversation. If you're going to get a bond loan, you have to be a first-time home buyer. You have income limits, you have sales price limits, and such. Non-bond loans have fewer requirements like that. You don't have to be a first-time home buyer. There's not a sales price limit. There's higher income limits. So you just have to meet those criteria. And the best way to find out if you can qualify to take advantage of all of these programs is to contact a local lender who specializes in doing Virginia housing loans. We have 77 lending partners across the state who represent us and do our loans. Um, you can contact them, and they would meet with a borrower. They would get their income, their credit information, and such, and to help the borrower determine are they in a situation to be able to take advantage of these programs. We also have a group of in-house lenders that work in the southern tier of the state, because there's in some areas in the southern part of the state there's not a lot of participating lenders, and so we're still serving them too. So we have a mobile loan van that drives around and like parks in the parking lot of Walmart, and they advertise in advance of when they're going to be there, and they'll meet with borrowers in that van. It's like an old fashioned bookmobile, if you remember what they look like. And so that the people that work for us in the mobile loan van, they provide many of the same services as our local lenders do. But if you contact the local lender or someone that works for Virginia Housing in that mobile loan unit, that's the best way that you'll be able to find out if you're eligible, if you're qualified, and if you're in a situation where you're going to be able to receive the benefit of the programs that we've talked about today.
Okay, so I want to go back. I know you said to have some reserves in the bank. Um, is there like a minimum that you all would require somebody to have saved up at all, Frank?
We don't generally have reserve requirements ourselves.
Okay.
So we generally just follow agency guidelines. And many times reserves are not required, they're not necessary.
Right.
A lot
And
of
I'll
times you can
also,
a lot of times you can get a loan with no reserves at all. You could go
hmm
down to your last nickel and
yeah.
still be able to get your loan approved and such. There are some situations based on agency loan requirements where you might need reserves. You might need a
Mhm.
payment in reserve, or you might need two or three payments in reserves. But those are probably fewer and rarer in occurrence. Most of the time, we would say you probably don't legally need to have a reserve. It just looks good. It just
hmm
demonstrates mature, responsible management of your finances to show that you have got some money left over because things go wrong after closing. The water
Yeah.
heater break. The water
Right.
heater breaks. Something happens, and if you don't have any reserves to cover the broken water heater, then you have to put it on your credit card, and then that can lead to a downward spiral, which the reserves help you to avoid that.
Yes, sir.
And one thing that I've noticed recently, because as lenders, when we send things through our automated underwriting system, they are really critical of people who kind of come in with no housing expense. So they'll have 100% payment shock when they get a mortgage because they're not used to having a mortgage or any type of rent or any type of housing expense. So I've noticed with those borrowers, typically reserves look really, really good, and that will like flip the underwriting system to give them an approval by having some savings. So it really depends on the client. And it really depends on their credit score too, the overall profile, because everybody's financial profile is completely different. But reserves look good for anybody. Whether we use them for you to get into a house or not, showing that there's money there, whether we use it or not, is always good. Whether you have a few thousand left, whether you have a retirement account with your employer, something like that, that strengthens your application. So it's not a requirement, but for some people, you have to put some reserves in there or show some reserves to get their application to flip to an approval. So it depends on the person.
Understood. Now, I had another follow up question because I heard the 620 credit score. Is that the lowest somebody needs for Virginia housing?
For Virginia housing, 620 is the lowest
Okay.
threshold that we will go to. So there are lenders out there that are not doing Virginia housing loans that sometimes can go lower than that.
Right.
Sometimes there's a 580 credit score that's bandied about, but it's harder to qualify for the loans with a 580 credit score. And Virginia Housing has set their requirement as 620 because we feel like that's a reasonable threshold. And in fact, the industry has kind of decided unanimously that 620 is a credit score that you don't want to go any lower than that, as far
Right.
as a risk assessment.
Okay. So, Frank, we have a question from a viewer, Miss Melissa Wade. She's watching, joining us from Facebook. And I'm going to put the question on the screen. I hope it comes up so you can see it. Let me know. Can you see that?
Yes, I can. So I'll read it out loud for Melissa. First
All
of all,
right.
I'd say, hi, Melissa. How are you? I'm glad you're on the call with us today. So Melissa wrote, thank you all so much for this information. If you own a home and you turn it into an investment property, how long do you have to be in the first property? Elaborate on that process, please. So I think you're saying, Melissa, that how long would you have to have been in your current home before you could convert it into a rental? I think that's what you're saying. So when you purchase a home and you get a loan for what we call owner occupancy, you're stating that you're going to get these preferential terms, because you're going to live in the property and you're going to use it as your primary residence. The legal documents that you're signing at closing say that you need to be in that property for at least 12 months before you would convert it into rental property. So if you have been in your current home with the existing mortgage that you have on the property for at least 12 months, there is no reason, there's no legal reason why you would not be able to convert that into an investment property, put a tenant in there, and you move into a new home, finance it with Virginia Housing, and call that your new primary residence.
Okay. And Frank, she said that is exactly what she was asking. If she needed to be in, a minimum of 12 months. But I think you did address that question. So yeah, so thank you. Um, Next question is kind of a simple one. Is okay, I've listened to the information today. It was very informative. And from what I'm hearing, I think it is time for me to become a homeowner because that's what this is all about. How can we help people uh, fulfill that dream? So, what's the best way for people to get in touch with you all?
Well, we have a really robust website. It's called www.virginiahousing.com, and you do have to spell the Virginia out. Don't put
Okay.
VA. Don't put VA. Housing, but spell out Virginia. It's virginiahousing.com. And then when you hit the home page, there will be a home buyer page, and then there's a lender page, there's a realtor page. But for everybody on the call today that's a home buyer, there's a home buyer page, and it's chock full of great resources that will help you to navigate through the process. One of the things that we offer to everybody, in fact, we require that you do this if you're a first-time home buyer, is we provide home buyer education. It's free and self-paced, and it's virtual, and you can find it off of our website. There's also a find a lender page on that home buyer page, and there's a find a realtor page also. So you can take the free home buyer education, which will prepare you for the process. You can search and look at an explanation, a deeper explanation of all the programs that I've mentioned here today. You can find realtors who are well versed in Virginia housing. You can find lenders who are well versed in doing our loans, and it is just like a godsend to be able to go to one place and to find all of this help there. And I think that would be the best place for you to contact Virginia Housing.
Okay. So you have two of your, I'm gonna say two of the best. Two of your best resources and contacts um, who work with Frank. That is Tyleek Mason, who's on the lender side, and myself, David, on the realtor side. And we have Frank's contact information. I have sat in one of Frank's classes before, a few years ago when he was here in Danville. And when I tell you, this man is highly knowledgeable about the information that he is sharing today. And he is one of the biggest supporters and proponents of home ownership in the state of Virginia. Well trusted. And Tyleek and I, we work together all the time. you know, we actually have a closing in the morning.
Yeah.
Um, with one of our clients, and
Bringing $0, I mind you.
$0, Frank. So one of our other buyers, she's watching today from New York, and I know she's looking to relocate here. So if it, and this might be a silly question to ask, Frank, but if we have clients relocating to the area, they can qualify for these programs also, right?
Oh, you mean from out of state?
Mm-hmm.
Absolutely. So you do have to live in the property, but if you're moving to Virginia and you're moving directly into a house that you're going to be occupying, you could come in from California, you could come in from New York, you could come in from Montana or Florida, as long as you're moving in and your source of income is based on it supports the idea that you're going to be living in the house and using the house as your primary residence. You don't have to have previously lived in the state of Virginia or in the local area to be able to receive the benefit of these programs.
Perfect. Because yeah, a lot of our clients do come from California, Texas, Florida, and New York. So we're calling these people to Virginia because I mean, after hearing this today, I don't know who wouldn't want to purchase a house now. And I know a lot of people have been conditioned to not purchase and just rent. And I would say that there's nothing wrong with renting because everybody needs somewhere to live. But to go back to a statement you made earlier with the generational wealth, especially with converting your first home into an investment property and then purchasing your second. I mean, that's where you are starting to decrease this gap that we see in home ownership. And again, just people just not knowing what to do. It's a scary task. We've worked with several folks who start the process, and It's the cold feet show up, and because it's daunting to think about buying a home, never done it before. Nobody in your family's ever done it before, and now you talk about all of this money I have to come up with. But listening to you, where you can purchase a $300,000 house and essentially come out of pocket with $0 and not have to pay a lot of that money back with the grant programs that's available. um, to me, it's a no-brainer. So I'm speaking to that person now who has been on the fence of, I've been thinking about it, I want to, I'm terrified. You have a group of supporters with you today who are rooting and cheering for you, that now's the time. I keep saying it, now's the time, now's the time. But I mean, to take advantage of being able to purchase a home, no money out of pocket, and it could be your first home, or it could be your forever home. And being able to do so with three people here who have your back. Um, it's I don't know. I'm pumped up, and my mind is just racing all over the place right now because I want to go into my database and send everybody an email and say, "Have you given up on purchasing a house? Let's rekindle that fire because we have new programs available that, I mean, make it almost easier than ever to do so now." Yeah, I went on a little rant. I'm sorry.
Well, deservedly so. It's something to
Right.
be it's something to be passionate about because I mean there is literally no reason for people to delay purchasing a home if they are potential home buyers. I mean, we provide I kind of look at Virginia housing as like a solution superstore where
Mhm.
whatever problem that somebody has which is delaying them or slowing them down or preventing them from purchasing a home, they can come to Virginia housing through the local lenders, and we can go back to our the back storeroom and come back out with the solution to the problem that will help you to get into your home. The sooner you get into the house, the better. It's amazing if you
Right.
look at the statistics on generational wealth building.
Yes, sir.
Home ownership is a key component of generational wealth building. If you look at statistics on non-homeowners and compare their household wealth with the household wealth of those individuals who have owned real estate, it is staggering the difference.
Absolutely.
And if you look, and if one objection that I've heard too about why people are delaying is they're waiting for rates to come down. They're waiting for rates to come down. But if you wait for rates to come down, as rates come down, home prices are likely going to go up more. So maybe the
Absolutely.
rate would come down 1%, but as you wait, maybe the houses are going to become more 25 or $50,000 more expensive, and you actually lose ground if that happens. We're in a really sweet spot right now with the excuse me,
No,
with the market demand. Um, a buyer can come in now and they can buy a house at a reasonable price, get some concessions and such. Rates are have come down some, but if you wait until rates do come down another percent or two, it is almost a surety that the sales prices are going to go up. It's going to become more competitive. We'll be back in bidding wars again, where you're going up against perhaps 10 or 12 or 15 different offers. So while the market's at this level, this is the ideal time for people to jump in there and get out there and purchase their home and start having the overall benefits of home ownership, but especially building wealth for your family that you can pass along to future generations.
absolutely. Yes, sir. And we're almost at the end of February. So home buying season is a few weeks away. It's coming. And I was in a group with another in a call with another group of agents a couple weeks ago, and one agent said, I think he read where for every percent that interest rates come down, you have like 5 million buyers coming back into the market. So, you talk about super competitive. That'll be 2020 and 2021 all over again.
Right.
So you will have those home prices, people paying 50 grand over asking.
Some people were paying 100,000 over asking during that time just to be able to win a house. So I definitely think it's a dangerous game to
Yeah.
just continue to wait, especially if you do not plan to save as you wait. That's definitely not a good plan, because when you have multiple offers, then you kind of lose a little bit of leverage in your negotiations. Even if we can layer these programs in,
Mhm.
layering these programs in now, partnering, down payment assistance with closing costs from the seller, partnering all of these things together is what really makes it little to no money out of pocket. But when you get into multiple offer situations, going over asking price, you don't really want to add and ask for closing costs because that makes your offer less strong. Then it gets really competitive. So if you do plan to wait on rates, then you should save as well, and save sufficiently.
Hey, it reminds me of a saying that gets bandied about in real estate circles. It's called uh, "date the rate, marry the house."
That's it.
And that, so you can get you secure the house while the market forces are in your favor. Get the house, and even if the rates are slightly higher than you wanted to have, a lot of experts, I can't say that this is going to happen, but a lot of experts say that rates are going to come down. And if you're already in the house, you can always refinance the house to a lower rate,
Hmm.
if that were to happen. So you're not stuck with that rate. If rates, you can get into the house. If rates go up, great. You've nailed it down. You're locked into that rate, which is a pretty good rate. But if rates do come down, you do have the opportunity to refinance, pay off your existing loan, get a new loan at a lower interest rate, and that would get your payments more in line with maybe what you would be expecting or desiring to have. So, again, every reason in the world why people should be looking right now, this is the ideal time to be purchasing a home, whether it's your first home, or perhaps it's time for you to take the plunge and for the first time buy a new home and turn your existing home into a rental property to multiply that generational wealth building that we value so highly.
Yes, sir. So, how do people get in touch with you directly, Frank, if they would need to?
They can email me at frank.webster at virginiahousing.com. And remember, you have to spell Virginia out. I'll be happy to answer any questions that people have that they want to ask to me. But I would tell you that I have very little contact with the consumer directly,
Mhm.
because we have business partners that are lenders like Tyleek, and 77 other companies across the Commonwealth that we work with. They're the ones that qualify you. They're the ones that answer your questions, process your loans, close your loans, and such. So it would be a really good idea to make contact with a local lender, Tyleek being a really great one, um, and um, and they would be able to have a better opportunity to help you with many of your the most common questions that you might have when it comes to buying your home, and financing it with some type of Virginia housing mortgage.
Okay, Talik, how do viewers get in touch with you?
So you can do two options. You could either call me at my business phone, which is 434-713-8607. And we can get something scheduled to sit down and talk. Or you could email me at talikmason@alcova.com. First name, last name at alcova.com. And we can get something scheduled to talk about where you are, get you on the right path to buying, and essentially utilizing these programs.
Awesome. So 434-713-8607 or Tyleek Mason at alcova.com. All right. And If you would like to reach myself, David Totten, I am in Virginia and North Carolina as well, along with Tyleek. You can always reach me on my cell phone number, which is 434 515 2112, or my email address at david.totten at exprealty.com. I'm going to put those up on the screen now. Frank, do you have any closing remarks for our viewers today?
No, I think it would just be an exhortation to action. We've gone through some rough times in the real estate sector in the last 2 years. Rates have gone up. It's been very competitive. There's been bidding wars. There's been a lot of things that have disappointed or dismayed homebuyers and perhaps caused them to fall out of the process. So this is going to be the year, I think, where you're going to have a chance to capitalize on a lot of positive energy and a lot of positive forces. Uh, Rates do seem to be coming down. We've already addressed that. We're rolling out all of these enhancements with higher income limits, higher sales price limits, allowing repeat home buyers to get into to use our programs and such. So don't let this chance pass you by. This is a great opportunity to take advantage of all of these things coming together into a perfect storm to help you get into a home, secure an affordable, safe place for your family, and to start receiving the benefits of generational wealth building. Nothing will have a greater impact on your future and your family's future to come than to be building your wealth up through the um, home ownership.
Miss Talik, do you have any? Thank you, Frank. Miss Talik, you got any closing thoughts for our viewers today?
So my closing thought is kind of similar to what everybody else has said. Definitely schedule a time to talk, and sit down. There's nothing wrong with talking and figuring out where you currently stand. Actually, the client that David and I are closing with tomorrow, I've been working with her since February of last year to purchase her house and to get her on the right path. So the time to reach out is now, even if you don't think you're necessarily ready, so we can get you on the right path to buy and put you in the best situation. Because I will say, in particular for the area of Danville, with all of the new businesses coming, with all of the new things they're adding to the city, to make the city a more attractive place for people to come and live and buy, the prices are increasing. So as you wait for rates to come down, those home prices are steadily increasing as well. So if you want to make sure you are not priced out of the market, because a lot of people that we're working with right now are people who are on a budget and are trying to secure some housing at really low payments because of, how high rent is. So this is the time to reach out, especially if you're looking for affordable housing as well, because the longer you wait, the more these homes appreciate, the more they cost. So, definitely go ahead and reach out, figure out where you are, and if this is a goal for you, we will help you accomplish it.
Thank you, Tyleek. And I guess my closing thought for everybody watching, again, is an echo of Mr. Webster and Tyleek, that action is your best offense and your best defense. You got a lot of people who talk a good game, but when it's time to do something, they shy away. And I think a lot of that, which would be part number two of what I'm about to say to you, is be careful who you take advice from. Because a lot of times you get advice from the wrong crowd of people, or people who have done things in the past, and those ideals, ideologies, systems are no longer relevant to today. Um, get a lot of people who, are excited about purchasing a home, but then they have a conversation with someone else that is not a real estate professional, and they end up psyching themselves out and missing out on a golden opportunity because they happen to take the wrong advice. So you have Frank Webster with you today from Virginia Housing. You have Tyleek Mason with you from Alcova Mortgage. You have myself, David Totten, with you from eXp Realty. We do this every day, all day long, and we have done it several times. So if you are on the fence, help us help you pull you back over on this side. Stop straddling, and do it now. Frank said it, and I say it all the time. Marry the house, date the rate. You can always refinance, but home values are going to continue to go up, and you can't time the market, honestly. When you have the right house show up and you have the finances and resources to purchase said house, that is the perfect time. So I don't have any other questions for you, Frank. I don't see any more from my viewers today. I do want to thank you both for joining us here on Living in Danville, Virginia. Thank you both. I really appreciate you. I know everybody that was watching, nothing but hearts, thumbs up, and likes today. So, Frank, if we could have you back, we would love to join us again.
I would love to be back on a regular basis. Danville is one of my favorite areas. Might even want to move there myself one day. And I would love to make a contribution as frequently and as consistently as possible.
Thank you. And Tyleek, of course you'll you'll be back. And yeah, I just want to help as many families, as many people as I can realize that dream of home ownership. It's almost nothing like it, especially when you can leave it for your kids and you can call your space yours. But thank you, Devin. We see you. Thank you so much for your comments today. We are looking forward to getting you to Virginia. Frank, she's going to be one of our transplants from New York.
All right. Virginia is for lovers, Devin.
Yes, it is. But yeah, thank you both. This show will be again on YouTube and Facebook for people to go back and catch replays. Information is there for contact information for Frank and Tyleek and myself. And again, like and subscribe to the channel. We would love to help you make Danville or the surrounding area your home. And until we see you in the next video, take care. God bless.
All right.
All right. See
Thanks,
ya.
Frank. Thanks, Tyleek. Bye, everybody.
Bye-bye.